Coming up in this show, I'm going to bring you my opening comments on the markets. I'll also show you a big picture analysis on the Bloomberg Commodity Index. This one is a great one, as it's going to show you why I think the Fed will have trouble cutting rates very quickly going forward. Katie's going to bring trade planning with options, applying our charting method with option strategies in McDonald's. And then I'm going to bring you my analysis on the stock market. It'll be multiple time frame, and what's different about this one is that I'm going to separate it for swing position traders and short-term traders. You're going to find it fascinating as I bring you our proprietary tools and indicators. And don't miss our fantastic Level 3 membership special, where you'll be able to get all the tools I'm going to show you right now.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market started out the week choppy as investors were nervous about Wednesday's Fed meeting. A strong rally on Tuesday came on Microsoft dividend increase and $60 billion buyback that lifted Microsoft, but that big rally failed at all-time highs, and a solid gain went to negative on the day. Wednesday was FOMC policy statement day, and we saw it brought big volatility. The Fed did cut rates by 50 basis points, which is what I did expect. This year, we're looking for potential for an additional 50 basis points cuts for the year. At least that's what the Fed is expecting. They're happy about inflation coming down near 2%, but worried about the unemployment rate, which has been creeping up. Remember, unemployment rate now has moved up from 3.5% to 4.2%. Full employment used to be thought to be about 5.5%. And why they're worried about it at 4.2% is a complete mystery. Still, they said they are data dependent, and that would mean that they're still looking at the data every single month to see whether they want to cut rates. And as I said in the opening of the show just a few moments ago, I think I'm going to show you a reason coming up why they might have a hard time cutting rates. In the meantime, on Fed Day, S&P 500 moved quickly to the upside. It was up as much as 55 points and then gave up 85 points, fell to negative 30, and then ended down about 12 points on the day. So a lot of volatility. That did look like some exhaustion from the rally and a lot of people anticipating what the Fed did. But Thursday, worldwide markets celebrated the Fed cut. And we saw markets around the world move up sharply overnight. And that surge brought the S&P buying back in, and we saw an early move of over 100 points in the S&P 500 to the upside. And those gains held all day, and the breadth on Thursday was very solid. We saw techs moving up, growth stocks, value stocks, small caps, mid caps, everything on very solid breadth. And that's what the market needs, good solid breadth, in order to maintain this upside move to what are very high valuations. Friday, well, there was a mild retreat going on early in the day. Here we are at midday right now doing the show, and then the market tried to come back up, but the buyers just were filled to the gills, and the market is selling off here at midday. S&P 500 right now down about 37 points, which is pretty mild based on the amount that the market has moved up. And the stock market, well, it has continued to trace out positive patterns in our work. We've showed you that, and we've talked about the market still making higher levels, even though the market did move to levels that were way beyond my expectations. Our short-term target was for the market testing the July high at 56.69 for the S&P 500. And now, with the extreme upside we saw, we have to say that a level that we looked at 58.30 on the S&P 500, which we believed was a remote possibility of getting there. Now, with this change in momentum and stronger market breadth and good pattern structures that we see, that level is achievable. So that 58.30, which we looked at now, may very well be a target for the upside. We'll look at that as we get later in the show. Also, the current structures suggest that the peak that we were looking for mid to late September is pushed out slightly in time, and I'm going to show you that also as we get into the charts coming up. But historic valuations are here. People write to me pretty regularly now that we're in a different paradigm, that we're looking at all of this new technology that's coming out in AI, and that changes everything. And I use AI every single day. I think it's absolutely fantastic. But that, new paradigm stuff, I've heard that in the past in my life. Remember, I'm a 50-year trader. I heard that in the dot-com period back at the end of 99, beginning of 2000, new paradigm we're in. We can justify these valuations. At that time, the valuations compared to the GDP were only at about 157%. So that is not even close to the high valuations we have now. And now go back all the way to the early 70s. Yes, I started trading in May of 74 when the Nifty 50 was around, and those stocks were at very high valuations also. And that different paradigm went just absolutely bust, and those stocks just collapsed. So all of this talk about new paradigm, and there's a good reason for this high valuations that we're looking at. Well, I think that's a bunch of hooey. What I believe will change this positive tone that we see in the buying spree that's going on is that inflation is not dead. All of this good feeling about the core inflation rate being, down to about 2.8%. The Fed wants it down to about 2%, and celebrating that, I think that's a big mistake. I'll show you that analysis in just a few minutes. Do not miss my analysis on the Bloomberg Commodity Index. I think it's just absolutely important that you see that, and I'm going to show you why there's a very likely bull market in commodities soon to start. I've talked about that a lot right in this segment, that I thought there was a doom loop, and that when the Fed really started to cut rates, commodity prices would move up. It would give the Fed problems, and I think that's just in front of us. Don't miss the analysis coming in just a few minutes. So while the Fed says that, they're probably going to cut another 50 basis points this year, and I think that's probable, maybe 25 and 25, then I think they're going to get stuck. And the stock market won't like it, especially here at a valuation of 200% of GDP. It is absolutely mind-boggling that they would be cutting rates with this valuation here, with what is a relatively strong economy, with unemployment at 4.2% and inflation rate all the way down to 2.8%, that they would cut rates right here. Mind-boggling. And I think they're going to get stuck. They're not going to be able to cut rates very quickly. And maybe they cut another 50 basis points or 75 basis points. But they're going to really be hesitant about it if this commodity market moves, as I think it will. Stock market for the week gains. The index is about 1 to 2% in this choppy week. The Russell was the strongest in that mid-cap revival, small-cap revival that I thought was necessary to keep the market moving on the upside. Bond market, well, a lot was baked in the cake, as I said, as they have something like 200 basis points baked in over the next year, which I think is ridiculous. So the bond market pulls back, 30s down about 1.5 points, and the 10-year yields jump about 9 basis points. And it was really a sell the news week for the bond market. Gold remains an absolute monster. Now, I think it's political that gold is this strong, but there's a lot of other reasons also that gold is this strong, with central banks buying a massive amount of it and de-dollarization out there as the BRICS is really trying to form and not do business in dollars. So there's a lot of reasons gold is strong. I think gold is going to have a pullback with the stock market in the fall, and that is going to be probably another great buying opportunity. So gold trades up to 26.45 as a high for the week, and it remains very strong here now at 26.38 on midday on Friday. Just a very strong. Silver and the other industrial metals, they had decent weeks, small upside moves, and copper and platinum are building bases that could be very important for a good bottom forming. And that's part of this analysis that I'm showing you, that the commodity markets are about to get much better. Dollar, small to the downside, and it tried to rebound. It's in really bad shape. There's no rebound that can hold in there. We'll look for a small bounce and then moving to the downside again. And the oil market up about $1.25 on the week. And I still think it's got significant downside risk. I'm going to show in that analysis coming up on the commodity market the long-term oil picture. And I think oil is going to be important to this whole analysis, because I think it's going to bottom when the commodities bottom coming up pretty soon. So you'll be able to see that analysis going forward. That's my opening commentary on the week. Please do go to askSlim.com and subscribe, share, follow. You can become a free member and get our S&P analysis every single day. If you want to just get acquainted to us, go to the askSlim.com website, into the free stuff tab, and click Snapshot Lite, and you'll be able to sign up for free, no credit card. On YouTube, subscribe to our channel, click the notification bell, and do like this video. Give it a thumbs up, and on X, follow it askSlim. And for any questions that you might have on this huge amount of education and analysis that we share, and all of our great proprietary apps and indicators, write to Matt at askSlim.com. This is our special offer. Watch this. Hi, I'm Steve Miller. Many of you know me out there in the trading world. I'm known as Slim. That comes from my time when I started on the CBOE back in 1974. My badge on the floor was SLM, so people called me Slim. And yes, I've been a trader for 50 years. Now, our membership website and our amazing analytical team brings you education and analysis and support for traders and self-directed investors. I'm going to show you now 10 reasons why it would be great for you to become a level 3 member with no special required software. And you're going to be able to view and learn our cycle analysis and so much more. This special is for 3 months for level 3, and it's 35% off our regular price of $119 a month. So you're only going to pay $232 for 3 months. That's only $77.33 a month. And you're going to be blown away by everything that includes, and I'm going to show you that right now. Keep in mind, you can go to askSlim.com for information at the top of the page. And if there's any questions, you can write to Matt at askSlim.com. Let's look at those 10 reasons for you to become a level 3 member. This special offer is support for your trade planning process. You can efficiently access the technical analysis data you need to assist you with your directional bias decisions, important timing insights, and key levels for critical decision points. It'll be filtered for your trader style and outlook, whether you're near term, less than a week, or short term, 1 to 3 weeks, or an intermediate trader for 3 to 8 weeks. You'll be able to see how you can just toggle in your style of trader. This is our Slimulator ranking system. This is the 84 best traded symbols. You can sort by momentum and the cycle analysis condition and our option bias indicator, which is just a fantastic indicator, and you'll be able to see the conditions in those individual best traded stocks and ETFs and indexes. You're going to get our sum of the evidence directional bias, and includes the key cycle levels and dates for each of those 84 key symbols. It also includes our market condition monitor, the MCM. You can select your own trading style right over here, and then whether it's intraday or a multi-week swing trading. There's over 130 symbols, again, of the widely followed stocks and ETFs with real-time updates. This is absolutely live, and you get notifications via Discord when things change. You can see in here that you can toggle in here and see the trade setup conditions. And in this case, it's set for intermediate right there, but you can toggle it to any of these time frames. And then there's a change log when any of these 130 symbols change. Just absolutely fantastic. It's our next level askSlim proprietary momentum analysis technology. All of the algorithms built right into the market condition monitor, and this is included with level 3. You also get our trade ideas, fantastic information that our team brings forward, and this is the trade idea page that you get depending on what the individual stock is you're looking for. You can see right in here what those symbols are when the trade idea came in, and you'll see if the status is live or if it's off, and it tells you about the entry range and our targets and what level actually makes the trade, what reevaluates it, because of course not every trade comes out correct. And it gives you this great information here on the bottom for every one of those trades. You just click on it and you'll be able to see. It's analysis to help you with your directional decisions and targets, entry zones. And you're also on each one of these going to get a teaching video on how our methodology is applied. Trade planning samples on every single trade idea. You'll be able to roll over the highlights for the status, click for notifications, and track comments on Discord. And you can see the bell right there that you can get sign up for the notifications. Absolutely amazing trade ideas included with level 3. You're also going to get our chart streams. This is the multiple time frame analysis that you get just on these 11 streams right in here. It has our stock index report intraday for those of you that are interested in the indexes, which is great. And then you can get SPX, NDX, Russell, SPY, QQQ, IWM, gold, silver, TLT, XLE, all of those running live. You don't need any special software, and you'll be able to see these with our proprietary indicators in there. Amazing. All of that in level 3 special. That's chart streams. Here's our cycle low timing tracker that shows the cycle phasing. It looks at the different time frames for periods of risk, for windows for bottoms pending, or when the bottom is in place. And you can see it has all of that in there for the key stocks and futures and ETFs that you would be interested in. And this is so good. Our members love this because it really gives them a heads up of the condition of the cyclical patterns that we look at so carefully. That's our cycle low timing tracker, cycle phasing. This is our futures, equities, and ETF hubs. This is it's so fantastic. Each of these you can click on, it opens up, it brings you the charts, it tells you the cycle dates, the important key levels in here. And whenever I do an update, which is at least a couple times a week, I give you my most notables. And the notes are right in here from what I have looked at. And then, of course, you can see in here the Future Speak show, which then looks at all of these features in there and shows you the analysis. Ivy does that every Wednesday. Just fantastic analysis. That's our futures, equities, and ETF hubs with level 3. You believe all of this? And here is our trade planning with options. Katie does just an expert job. She's our expert in option trading, and she combines our work of cycle analysis with this great tool at Tasty Trade. And this is just a fantastic way to learn about how to adopt our analytical style with doing option trades. She shows you how to do these option strategies on this great platform. Yes, all that included with level 3. And our video library. I have been building this library for 9 years. Every one of these has fantastic information in each of these categories. Future Speak, Avi does this every Wednesday, looking at 24 futures. Tools for Techs, I discuss many charting tools and studies. I'm going to show you some of that. Trader Psychology, yes, I've been a coach for over 20 years. I've helped countless traders, and we look at the personal issues that reduce your profitability. Trade planning replays. The team converts the analysis into trade plans. Stock sectors, just a great look at different sectors that are ready to pop or drop. Big picture analysis. I generally am the one that does this, where I look at major markets, and I'm going to show you the way I look at markets when you go to this particular segment, and you'll be able to see those big picture analysis. Style, strategy, and plan, many subjects in the markets. Market Week, and that's our archive with all of our commentary and tons of analysis. And askSlim Live. This is replays of our live events with the entire team. Let's take a quick look. I'm going to go to the dashboard here, and you can see in here where you can get these particular segments. And let's take a look at let's take a look at Tools for Techs right over here. And that's going to open up the list. Look at this incredible list. There are over 80 videos in here that I have done that teach you so much in there. You can see cycle analysis basics, island reversals, momentum and rate of change, directional bias for swing traders. I mean, all of this is in here. I have recorded all of these videos, and look how much learning you can do. This is from my 50 years as a trader. Just absolutely incredible. Let's take a look at a couple more of these categories in here, and I think you're just going to be absolutely astounded. Let's take a look at the trader psychology right over here. So many people have so many issues with personal issues that keep them from being successful. Look at everything that's in here. Analysis paralysis, having a healthy mindset, emotional intelligence in trading, about your self-perception, fear, transforming negative energy, breaking free of our traps, the year-end urge to catch up or cash out. It's 13 things mentally strong people do. The shadow, was that ever important? Trader-spouse relationships, man, have I had great commentary on that. All of this, yes, I've recorded over all of these years. There are so many things for you to learn in here, and this is all included in that Level 3 membership. Just absolutely incredible. So you get all of these categories, all of these videos, from my 50 years experience. You're going to get offers hours with Arvi as he steps into the driver's seat and gains insights as my protege. Arvi applies cycle analysis to your chosen symbols. So you get to submit your symbols before the show for custom chart analysis and access to the charts reviewed in every single segment. Arvi then does that, supply that, and that is office hours with Arvi. Here is our Discord server. The team is on here. It's premium members only, so you need to be a premium member to get in here. With your Level 3 membership, you're going to be able to get in here, ask questions, participate with the community. Wow, it is incredible. And there's going to be a live trade planning presentation for a Level 3 webinar and a tour for your questions and answers. It's going to be askSlim members, and this is Tuesday, September 24th, 12:15 p.m. Central Time. It's live on Zoom. And you're going to see Matt and Arvi how to utilize Level 3 services to support your trade planning process. Using the askSlim methodology, Matt and Arvi will discuss and demonstrate how to apply cycle timing, cycle structure, momentum studies, Fibonacci swing high-low analysis to produce the fundamental and technical evidence for trade planning purposes. You're not a member yet? Well, go to askSlim.com and become a free member. No cost to you at all, and you will get the webinar link, and you'll be able to learn how to apply everything that's in here for Level 3 for your fantastic opportunity to really up your game as a trader. We want to give you the broadest amount of tools, the broadest amount of support that we can possibly do, because your success is our success. Please do go to askSlim.com, go to the top of the website, click where it says Level 3 promo right on the top, Level 3 special, and you'll be able to sign up for this fantastic special price, and there will be lots more information for you in there. Or write to Matt at askSlim.com with your questions. You're going to be so happy that you became a Level 3 member. So will I. Absolutely fantastic. Thanks for listening. Okay, well, now I want you to do that. You've seen that. Go to the askSlim.com website, go to the top of the page, and click on Level 3 Special. That's offer 35% off, and you'll be able to get all the fantastic stuff that mentioned and that you're going to see me using some of in the rest of this show. Big picture analysis on the Bloomberg Commodity Index. Watch it. Big picture analysis, Bloomberg Commodity Index, BCOM. And I'm going to show you why I believe risks are high that inflation is going to rebound. We're going to look at multiple time frame analysis in the Bloomberg Commodity Index, and I'm going to teach you some cycle analysis while I do this. I think this is important. Many times you've heard me say that I thought we were going to be in an inflation doom loop. In other words, when the Fed finally started to cut interest rates, that commodities, which have been soft, would then begin to rebound. And we would get another period where commodities were very strong. We've seen that the grains were weak for a long period of time, potentially bottomed if you're following our analysis. That the metals, industrial metals, have been on the weaker side, especially compared to the gold market, which has been extremely strong. And overall, we'll say the commodities have been soft, led very much by energy on the downside, and oil has been extremely weak. And that's been following the analysis that we expected. So now we're going to look at this commodity index. I like to look at this one maybe a little bit better than GSG or the other ones. They're all heavily weighted by energies, but this one less so than GSG if you look at that, or the GSGCI. So we're going to look at this, the Bloomberg Commodity Index, for this analysis, multiple time frame analysis. Let's switch over now and look at the charts that we're going to start in, which is the weekly and daily charts. And this is, of course, cycle analysis. For those of you that are brand new to this analysis, we're looking at the rhythms in the market. Essentially, these are money flows, and we have a very mechanical way of analyzing the market based on the shape of the individual cycles. We use these half circles in the bottom, cycle brackets, in order to be able to see where there is a rhythm. In other words, a similar time between each of the cycles. They're not exactly the same. We come out with an average time frame. And looking at this one, this is 28 bars that we're looking at between each of these cycle periods on average on the weekly chart. You can see here also on the daily chart that there are also cycles in here, and I'm going to look at them in detail so you understand. Let's start on the weekly chart right over here, and you could see the cyclicality that is in here as we look way, way back over here. From this is into 2019 over there. So we're looking at about 5 years in here of cycles. These little notations in here where it says right-hand translations right in there. Let's just get a little closer in here so you could see. Right-hand translation, right-hand translation. That means that each of these cycles peaked on the right side, as you can see. That only leaves time, a little bit of time for corrections. When you peak on the left side of the cycle, as you can see right over here, that leaves a lot of time for corrections, and you get into bearish trends, as you could see. A lower peak, lower trough, lower peak, lower trough, lower peak, lower trough, lower peak, lower trough. Each of those breaking the cycle where it started at those cycle support levels and giving us the downtrend that we've been in. So where we are right now is, as you can see, we're getting into the period that we call the bottoming period right in here, in between these two timelines, which tell us that this is what the range of time is that the bottom or the trough should be set in this particular cycle. So the expectation is when you have a left-hand translation is the next cycle will not achieve a higher peak. This one got close, as you can see right there, And the translation in here is pretty neutral. So it tells us there's some kind of a potential bottoming going on, but it is still negative. And you can see in here the reversal scout right there is still negative and then turning upward. So when it turns upward, it gives us the warning of the bottom in there. So this is a warning that the weekly cycle has bottomed. Now what we do is we look at multiple time frame analysis for confirmation in that, and just before we move on to any other charts, I want you to see the holdings in here, where energy is 29%, grains 23%, industrial metals 16%, precious metals 20%, soft 7%, livestock 5%. So it's pretty broad, but as you can see, weighted mostly in energy and metals. Maybe that's where the most interest is when you get into these commodities, or the most demand, or the biggest floats. So we're in this period where it's likely rising, but you can see I don't have it projected taking out that peak, though it certainly could project another peak to test that area up over there. But this you could see as a rising phase. This says to me commodity prices likely to rise. Now, you can see in here where this was falling, we know that the bond market has been projecting that there will be cuts in interest rates, and they projected something like over 200 basis points of cuts. And generally, when the commodities are soft, you get into those periods where the market will then potentially project lower interest rates. That's what went on right in here. Now, it's yet to be seen whether the market will begin to project that interest rates have been, there's too much baked in the cake in that market. We don't really know that yet, but there is certainly the way that the Treasury yields are priced, it may say that interest rates will fall very sharply, but we've seen in the past where that actually didn't happen, where the market overestimated what the Fed would do, and that happened earlier in this year. So in this case, we're looking at just the bottoming here in commodity prices. When I look at the daily chart, and I'll just go to the side-by-side for a moment. Here's that weekly chart and this period right in here where we see the upward turn. Here is the daily chart, and this is really interesting because it has a dominant cycle and a minor cycle, and as you can see in here, turning up right there. So this big upward turn that you see here and the upward turn in the momentum conditions is also showing you that right in here. You could see that green arrow where it's showing you the slim ribbon has turned positive, and that is an indication that the market is turning more positive. Of course, there are all these resistance levels in here. These are the minor ones that are colored, comes off of this peak, and these are the dominant ones that comes off of this peak here. I'm going to blow this chart up now for you to see so that you can see the magnificence of the cyclicality that's in here, with a dominant cycle made up by two minor halves, and the minor halves very clear, and the conditions of the market very clear as the slim ribbon comes down right here. And the slim ribbon is a free indicator. If you want to know how to get that, you can write to our team. And on the bottom here is the slim ribbon PO, which is a level 4 indicator, and this gives you the signals when it's likely to resume in a particular direction. And you can see in here it was giving you all of these resumptions to the downside, which were just fabulous. Now you see what happened is it turned neutral right here and now is just turning green. So you have the beginning of what could be an extended period of positive momentum. You can see the projections in here. Now here's your minor cycles as they make up the minor halves, and that projects for coming up a little bit more, pulling back, and then moving up again, and potentially this cycle forming a positively configured cycle. Look at the beauty in here. Left shoulder, head, right shoulder. This was a very weak right shoulder. Made the head and shoulders top. It projected down to this level, which was just fabulous. So you can see all of this great information and how the cycle patterns actually make these chart patterns right in here. You always get chart patterns that are very interesting and you say that have meaning, but really it's the cycle rhythms that do create them. You can see in here where the positive upside conditions existed, where the minor correction was right in here. What that gave you was this little triangular shape right in here. Triangles are shaped by the dominant and minor forces opposing each other. And then when you get into the next minor force right over there, you get them moving in the same direction as they came in, which is a high probability. So you might have learned that, but didn't really know where those energies came from. And I just explained that to you. That is all taught in our cycle analysis workshop, which you can see on our front page of the site. So this is a positive condition right over here, but coming up into the momentum, into the resistance areas, which may stop it for now. I'm also looking at this date right over here, which is early in November. And it's making me look over here and say, what happens early in November? Well, early in November is right over here on the weekly chart. That is really clearly going to be a time frame when it should still be rising. And that says to me, this is likely to be a positive cycle here, and then moving up again after that. So you can see we have these two projections in here. So what are these dominant forces? What is it that pushed the market down for this long period of time that you see right in here on the weekly chart? Well, those forces come from the longer cycles, which we explore on the monthly chart. I'm going to show you the monthly chart right over here, and you can see in here again the magnificence of the cyclicality that's in here. So this was that long period of decline on the weekly chart, as you see right there. Let me just get my pointer. And here is where the momentum went negative right there. And momentum, it was unusually choppy right in here and is still negative. Now, we have that weekly cycle that looks like it's bottoming. I just proved it by looking at the weekly and the daily. That pretty much sense to me that we can look for this monthly pattern to be bottoming also. We don't know that for sure yet. We don't have the momentum upturn, though we do have the momentum upturn in the weekly and the daily. It's kind of like a domino effect. The upturn will come first from intraday, then the momentum will be positive in daily, then positive in weekly, and then the last one, because it's much harder to turn that big tanker, is when you're on the monthly. That would then give you an indication. But what's important to look at in here is that we're getting into the period where commodity prices are likely to be rising in here. That's through a Q4 of this year and into next year, early into next year, or maybe even into the middle of next year, depending on how strong this is. If there is a rally in here and it gets above these levels that you could see right over here, that would be a cycle breakout, and that would tell you that a major bottom had formed. So that's an important level right over there on this BCOM, right around the 108.20 or so, which is where those peaks were right over there. It would take that to really tell us there was going to be a really big commodity surge. Now, you can see in here, as we looked at the monthly, it's just turning up right there. Again, we'll look at the weekly. It is just turning up right over there and momentum getting better. You look at the daily. This is coming into what looks like it's going to be a positive formation. And there's your monthly, and all three of these multiple time frames warning you that commodities are going to have an upward move. It could very well be a large upward spike. We don't really know that yet. Let's get a little help. You can see in here that the energies, when we look at this, the energies are the top weighted right in here. And that would mean that we'd be looking for or really need to have a rally in energies or in light crude to really prove that this was the right timing for a bottom. I'm going to switch over here to /CL, and this is the incredible monthly cycles on light crude. Now, what you can see in here in those yellow areas are the areas where there are periods of risk. In other words, it is the very final phases or corrective phases in each of these cycles. We are in that right here. We had been bearish and talking about that we're going to see the oil market move into the low 60s, and you can see right over there it did that. Got to about, 65, mid-60s. See here, similar to 2018 through 2020, that's right over here. Look at this, a big cycle, a failure in resistance, a big cycle, and which gave up the whole cycle. That made it looking negative for the longer term. Same thing here on this monthly cycle, a failure in resistance, a failure in resistance. This is identical. You get that right over here where it failed next in that resistance. That's right over here. That's identical. It pulled back for 3 months very sharply, 3.5 months. It's pulling back for 3 months here. The question is oil done, or is it going to have, one more move on the downside and capitulate like it did back over here in 2020? Remember, this was the pandemic, and that's why it was so extreme. Oil went to negative $40. Nobody in the world ever thought that could happen over there. This is not likely to do anything like that. If anything, it's likely to make a bottom soon and give you this big, massive triangular shape right over here, which would be quite bullish if it did break out. Where's the breakout? Well, here's your downside right there. This is almost a VTL. VTL would be connecting that top valid trend line. That's also in our cycle analysis workshop. And that really says to me that, if it can make its bottom in here and get out over $75, it's then going to have set a very, very major bottom. We are still in a period where this bottom may not be set. So I wanted to show you, look at the beautiful similarity in here. Of course, it is the heaviest weight in the commodity index. And remember, it's a $BCOM if you're on the Thinkorswim platform. Look how similar that looks. When you look at that, this is more of a downward slope in here. And when we look at that, and that is because there are other commodities in there that were weak, that were weighing on it, especially industrial metals that were pushing to the downside, and grains pushing to the downside. So ultimately, this message in here is that there is a very important bottom that is forming in the commodity markets. It may have formed, it may be close to forming. What it says to me is that Q4 and that into next year, commodities are going to be rallying. That's going to make it very, very hard for the bond market to improve at all. It's also going to mean that the number of rate cuts that the market is pricing in will likely be reversed. And we could very well be looking at the Fed really threatened by higher commodity prices later this year and into next year, and how that would then change the whole tone of what we're seeing right now in the markets. I thought this was very important analysis. Normally, I would only bring this analysis to our members, but since we're running some important specials right now, I wanted you to get really a good peek, if you're not a member, to see the type of work that we do and what multiple time frame analysis looks like, and some important teachings about cycle analysis, so that if you're not a member, you'd get a really good idea why it would be beneficial to you to become a member. Later on, we're going to talk about our level 3 special we have going on right now, so you can look at that also. That is the big picture analysis of the Bloomberg Commodity Index, and I hope you found that absolutely illuminating. Trade planning with options. Katie shares a bullish options trade in McDonald's. She combines our analysis with option strategies. Don't forget, she's going to show you how to open up an account at tastytrade through the askSlim.com website. That helps us if you do that, and you can see what the special bonuses are at tastytrade. It is a fantastic options trading platform. You could trade everything on it, but it is just fantastic. You won't see another one out there like it. So please sign up through our website. Open up an account there.
Hi, this is Katie with askSlim. This is Trade Planning with Options. On September 19th, 2024, we're going to look at an options trade idea in McDonald's. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. We're going to start by taking a look at the weekly chart of McDonald's for an overview. We are currently late rising or early peaking phase of this weekly cycle. We had a strong move off that prior cycle low. That prior cycle was negatively configured, meaning that it ended lower than where it began. So we would not have expected McDonald's to make it back up to this level. That was low probability, but sometimes the low probability event does happen, and McDonald's has gotten close to that prior cycle peak resistance. Notice that this $300 level has been difficult for McDonald's to get through. 5 times we have backed off from there, so that is an important level. Momentum is positive. Here's our reversal scout. It turned green shortly after the cycle low formed, helping us to confirm that intermediate low, and it has remained green. Our next weekly cycle low is due out at the end of the year. Now let's take a look at the daily chart. Back here is the low that corresponds to that intermediate low. We have had 2 positively configured cycles, which means that the cycle ended higher than where it began. This one got up to that prior cycle peak and then retraced to the top of the support zone with a good momentum continuation signal down here on the slim ribbon PO. This one that we are just finishing made it up to the top of that target zone at the 100% extension level and is now inside the daily cycle timing window when we would expect the current daily cycle to form a low and then move up into the rising phase of the next daily cycle. We do not yet have an indication that that low has formed. Now we are getting a momentum continuation signal on the slim ribbon PO, but momentum on the 2-hour chart has not returned to positive yet. It's early in this timing window, and we would like to see a bit further retracement. At that time, we're going to look for a move up to once again test that 300 to 302 level. Maybe it can even get through there. Now I want to show a couple more of our askSlim tools. I identified the trade idea by looking at our cycle low timing tracker. Here is McDonald's in the daily column of the cycle timing period of risk category. Next to the symbol are these 2 small green boxes. The first represents the intermediate time frame and the second represents the short-term time frame, and the color is a visual indication of momentum and cycle phasing conditions. We could also look at our ranking system. Here is McDonald's in this first line here. It says that technical evidence favors a long side bias. And the colors over here are similar to the boxes on the cycle low timing tracker, showing a visual representation of momentum and cycle phasing conditions in the various time frames. This last column also shows the OBI, the options bias indicator. McDonald's is at P2, indicating an overbought condition, and that is why we would like to see a bit more retracement inside the daily cycle timing window to alleviate that condition. Now we're going over to the Tasty Trade platform. They are our preferred options trading platform. You can go to the askSlim homepage, hover over partners and click on Tasty Trade. That will take you to a page where you can learn more about them. And if you do choose to open an account with them through our link here, that will help you with a special bonus, and it does also help us. Okay, here's Tasty Trade. It shows that McDonald's currently has an IV rank of 39, which is sort of middle of the range relative to some of the IV ranks that we're seeing right now. You could do a short premium, but I'm going to do a long premium trade idea. Now remember that we're waiting for an entry signal, so our strikes might be different at the time that I activate the trade idea. I'm going to use this October 18th monthly expiration cycle because that aligns with the late peaking phase of the upcoming daily cycle. Now, because McDonald's is a relatively expensive underlying, I'm going to set up a call debit spread. This is a bullish trade that involves buying an in-the-money call and then selling an out-of-the-money call against it to reduce our cost basis and cut down on our capital requirement. We are looking for a spread that gives us a profit-loss ratio of right around 50-50. Again, the strikes might be different at the time of activation, but if we were entering now, we could buy that 290 call And I'm going to show a $10 wide spread, so I'll sell the 300 call. That gives us a profit-loss ratio that's pretty close to 50-50. We pay a debit of $5.17. That is also our capital requirement to place the trade and is also our max loss. Our max profit is the difference between the width of the spread and the debit paid, so $483 in this case. Here's what the risk graph looks like with our profit zone in green and our loss zone in red. I will update the options trade idea tracker with this trade idea, and I will post on our option strategies Discord channel when the trade gets activated and the strikes if those happen to be different. That's our options trade idea video for this week. You can reach me on Discord or via email to katie@askSlim.com if you have questions or feedback.
Stock market analysis and projections on the S&P 500. Here's some important information. This talks about how we look at the markets, what our approach is to the markets, and it also talks about you and how you can use the information that we provide and the important aspect of trade ownership. You have to own your own trades if you're going to be successful, no matter what I say, anybody on our team says, or what anybody in the realm of option analyst or any of the websites out there that talk about markets. You have to own the trades if you want to be successful. All right, our level 3 special offer. Make sure that you do look at the great huge list of things earlier in the show that's included in here, where I show the 10 reasons to become a level 3 member. You can become a level 3 member 35% off the regular quarterly. It's just $232 for 3 months. That's $77.33 a month versus $119 a month. You will never have so much great information from anywhere else as we provide to you. So go to askSlim.com and go to the top of the website and you'll be able to see how to sign up. Also, for those of you that do sign up, and if you become a free member, you're going to get this. You'll be able to attend this webinar, which is on Tuesday, September 24th at 12:15 p.m. Central Time. You're going to get a live Zoom link that you'll be able to attend. And Matt and I are going to review everything that's in here and how we use our analytical approach with our tools and our unbelievably unique style that we have. They're going to walk you through all of that. And then you're going to want to become a level 3 member at this great discounted price. Stock market analysis, SPX, cycle analysis and projections, using level 4 indicators. And I'm going to do separate analysis this time for swing traders, position traders versus short-term traders. Usually I put that all together, but I really want you to see the difference in the styles and how we, how the things we offer are available to traders and investors really of any style, of any holding period. And I think you're going to just love this approach. So let's take a look as we look at the stock market. And we're going to look at the S&P 500. Again, I'll be back to that in just a moment. Again, what we're going to look at is the approach for, or the analysis for swing trader, position trader type traders, investors. So what we have here on the left, right here, sorry, we'll start out with the longer term. We'll start out here looking at the weekly right here. So this is a weekly chart on the S&P 500. This is the daily chart on the S&P 500. So I'm looking at it on the side by side. Now, we said, and we sent what we call as one of our most notable comments to our members a week ago, and we said we were entering into this rising phase on the daily chart. And we said that we needed to see what the strength was in here. If it couldn't make it up to this high over here, which was a normal target at around the 56.69 area, which was like right over here, sorry, and this is that other high here of that cycle, that it would, then be telling us something negative, that we were getting into the period of risk here. But if it got through it, of course, that would tell us the market was still strong. And that is what we did. So before I get into how you actually use this information, let's analyze first the weekly pattern right here, and then we'll analyze the daily pattern. So the weekly pattern you can see in here, this minor cycle right in here. And for those of you that are brand new, these brackets on the bottom that you see are a drawing tool. They're a guide for us to be able to see what the money flows are, the rhythms in the market. And we had this break right over here, and the sharpness of this decline right over here came on that yen carry trade panic, which had it break pretty nicely right on time into that time frame. So these two lines you see here are what we call the bottoming timing period right there, and we have another one of those coming out over here also, which suggests that there will be another decline. Now, when you get this period in here where the minor weekly and the dominant weekly are both pointing to the downside, is when you get the biggest corrective periods. You can see that here and here and here and coming up over here. Our projection was that sometime in September through November would be that period where the window opens for that correction. What happens is that as the momentum turns up right over here, we look for the momentum conditions to begin to weaken and turn down before we actually believe we have a peak. So under the conditions we have right now, what we see is that the minor cycle is rising and making a new high. That tells us there's still a strong upward force from the dominant cycle, as we can see here on this daily, on this weekly momentum condition right there, looking at our level 4 indicator, the reversal scout. So that tells us that there's no reversal yet. And what we would expect would be that when we would get into the actual period of risk, when the market does begin to fall in some significant way, then that is very likely to give you a downward turn in momentum and a decline. Now, because this decline was as far down as it was, we're projecting this decline over here to take us down to that monthly 23.6% support area, which is somewhere down over here around 51, under 5,200, maybe down as low here as 5,100. So we expect that kind of a decline in here. But that's just anticipating, projecting that what happens in every single cycle, as you can see here, 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 and here, is going to happen again. And I've studied cycle analysis now for almost 50 years, and these are very consistent. So there's a sizable decline out there between now and sometime in mid-November. The window is open in that time. We have to let the market tell us when it really starts to decline and when we get into that. Here is the daily pattern right over here, and what we do is we construct what's called the slim cloud. It starts out with 3 or 2 channels, 3 lines in here, and what we look at is what we think is the most obvious one for it to follow, and this one coming up and testing that high, as you could see, but then it takes a higher track, so we have to accommodate that and learn from that, and it tells us that, well, the possibilities are that this comes up in here sometime into early to mid-October and then has some downward move. If this follows this pattern and remains in a positive construct, which is what this is with a higher low right there, and that looks obvious that it will be that unless some heavy selling comes in, then what it tells us is that the next cycle over here, and I'm going to duplicate that trend line right there, takes us into something like this, where it moves up in here after a decline, and then it has a very sharp decline because of the weekly pattern over here getting into that period of risk. So it may very well be that it's mid-October to mid-November that the real risk for the downside occurs based on that analysis. So what happened in here was that we got this positive cycle. It told us there'd be a rally here. When this turned positive, the slim ribbon, it tells us momentum is positive and strong. When the slim ribbon PO on the bottom turns green, it tells us the same thing. And as you can see here, when it's giving you these buy signals, in other words, momentum resumption signals, like you see right over here, like you saw back over here, then that tells you more about the strong condition. So if the market comes down a little bit and then this gets under the 25 level, gives you a green arrow, it will be telling you about further resumption to the upside. So when I look at this for the position trader, for the swing trader, the option trader that, holds, 15 to 30 days, something like that, what it tells me is the conditions are positive. And that, when you look at the upward momentum right over here and the upward momentum right over here, whenever you get into a condition where the momentum is pointing up on the weekly and pointing up on the daily, and this is green down over here, is when you have the highest probability of a rising market. So in other words, if you're anticipating the period of risk and selling into the upside, if you're liquidating longs because you're an investor, I get that and I encourage that. However, if you're a trader and you're looking at this and saying, well, the market's got to fall, you're standing in the way of an upward moving rocket, and of course, you're going to get blasted if that happens. So the best case that you can look at in here, if you're a bull, is that it will continue to move up into this area of resistance, in my opinion, which is somewhere in the low 5800s. That's where it comes out here on the weekly. This line right over here and this line, let me just blow this up so that you can see it. This line right over here and this line here are off the daily, which shows you where the resistances are. So it's stalled here at the daily resistance, as you can see right here and right here. And this run right up over here is just over 5,800, as you can see over here. So the potential for a move to 5,800 or a little higher is there. Certainly when we look at this, and the conditions are still positive. Let's switch over to our website over here. This is the new front page if you haven't seen it. And if you want to get our free information, go into the free stuff here and click on Snapshot Lite. You'll get our daily information. But this is where you sign up for that level 3 special with everything I'm showing you right now, and you're really going to enjoy that. So let's go right over here to the Market Conditions Monitor, which is just absolutely fantastic. Now we're showing right now really looking at intermediate term conditions. And for those of you that are longer term holders, swing traders with long holdings, though if you were a little shorter term, you might look at this right over here, and you can see SPY, QQQ, IWM, DIA, all of them very bullish right there on short-term and intermediate term. So that's been that way for quite a number of days, and that's giving you the look at very positive conditions in the stock market. So we're looking at our market condition monitor right over here, and it's just a great way to see the markets. Just quickly, I'm just going to look at trade setup conditions in here. You can get in here the top ones that are still bearish or very bearish right there, and the ones that are in very bullish condition, as you can see as I click on it right here. And FEZ, XLF, EWG, that's Germany, Uber, KIE, XLK, all very, very bullish right over there. And if you want to get notified right over here, those are notifications right there, which is a separate app for the notifications. But you can see in here how these are very, very bullish in a lot of cases, and certainly for the stock market, they are very bullish. So these conditions look strong to me. That means that we're going to get pullbacks in here, and it'll probably try to move up again. And until we get an indication of this becoming negative, then we don't believe we're going to be moving into the period of risk that we are talking about. Now, so this is for the position trader, the longer holder of swing trader, the option trader that, holds positions for some 15 to 30 days, something like that. That's what we just looked at right now. So now, what we want to do is we want to now change over and look in the short-term traders or near-term traders. These are the people that are holding for just a number of days, maybe as much as 8 or 10 days, or much shorter than that. So we're going to look at the analysis changing in here. So I'm going to switch over to a different set of charts, and you'll see that this daily chart now moves over to the right side, and now what I'm looking at is the 2-hour chart. This switched over to the left side, and on the right side is the 2-hour chart. So if we look at this period right in here, the declining period here, and this rally, so it's let's look at this period right in here, and that's this decline. Let me just line this up a little better for you to see. So this decline right in here, where we had negative conditions, that's this right over here on the 2-hour chart right there. And let me get my pointer. So this is this decline right over here. This is this rally right over here. And this corrective period right here is right here, and then the rally we're in is right here. So what I'm showing you in here is our proprietary indicators that are how it looks on a 2-hour chart and how it looks on a daily chart. So if you're a short-term trader, you're going to essentially, especially if you're an intraday trader, this is a very, very important chart for you on the 2-hour chart, because it's going to tell you about, what direction you want to be in, and maybe even your position sizing if you are an intraday trader. Now, if you're a day trader or a trader that is what we call near term, that holds for maybe as much as 8 or 10 days, then you're going to use both of these charts right over here. And this is really your position sizing and directional decision chart here. And this is your entry, exit, and how you bias your overall positions right over here. So this is when you see the market turned up and you see it turn green right over here, and you're in this positive period right over here, that aligns right in here with this positive period right over here. Slim ribbon, PO. You can see these signals right over here of upward resumptions. And what this tells you, when the daily is in a rising phase and the 2-hour is in a rising phase, and the momentum conditions line up as positive and positive, as you see right there, that is when you must bias your positions to the long side. Then when you start to get the rollover here on the 2-hour is an indication that the daily chart is beginning to have a correction. And you can see that right in there where it turned down in here. And this only went neutral. This never went red over here. So you may not be overly excited about your position sizing, but when this goes negative right over here, well, you don't want to be long anymore for sure if you're going to be short, because this is not negative. It's kind of neutral. You may not have your biggest size short positions on. You can use this for your position sizing, as I'm saying, and this for your directional decisions. Then when the market turned up again right in here, so let's just look at this period right here, and then this period right here, you can see this told you about the downside. This told you it was neutralizing. This now turned positive. This is giving you upward resumption signals. Here is your positive momentum. I'm showing it with this arrow right in here in positive momentum. That lines up with the positive momentum right over here on the daily chart. And that tells you you have to have your position set bullishly. If you're trading the short side, if you're expecting a decline, you are fighting the information that is so clear looking at this. So no matter what I think, no matter if I think there's a period of risk coming, especially if you're a trader in this duration, which is the short-term, near-term duration of just a number of days, there's no sense on being short when the risk rewards favor the long side. So that's really important. No matter about periods of risk or long-term declines or any of that, this is where your focus is, because you're a short-term, near-term trader, and this gives you the kind of information that you need. If you want to look at the potential for reversals Well, it's best to look at where you have extreme oversold conditions. Let's just switch over. I'm going to go from the market condition monitor to our ranking systems. Now, if you become a level 3 member, you're going to get this also. And what I like to do is look for stocks that are giving me extreme overbought conditions for the short term. And I'm just going to use the OBI here, and I'm going to click on it. And I'm going to look for the orange readings. In other words, P1 orange is it's positive in momentum, but at an extreme. And Caterpillar, Deere, Oracle, PayPal, XLI, those are in the category. Now, if I wanted to short against this really positive momentum that we have going on, those would be the ones I'd look at, because our indicators are telling me the probability of much advance is small compared to the probability of a short-term or near-term pullback. You can see in here the directional bias on these are very bullish but overbought. Our algorithms are telling us that in here. The reason that it doesn't say overbought here is because this is yellow here. It's not green, so it's not quite as overbought as you can see, but the other ones are telling you that they are. All this information is in here. So if you want to know the directional bias conditions, the ones that are very bearish in here, or long-term, intermediate, and short-term negative, OBI, negative option bias indicator, you can just click on that and it tells you. This is the top 84 best traded optionable symbols, ETFs, stocks, indexes, and futures. So you can see in that. Let me just scroll up to the top in here. These are the ones that are very bearish. We know that about Boeing, you know how bad a shape it is. And if I go on directional bias to very bullish, you can see the ones that are in there at very bullish, and these are in P3 conditions or P2, which is a tiny little bit overbought right there. And these are the intermediate momentum conditions, which are all positive in there. When they're P1, they're late in the upside move, and you could expect that there would be some reversal coming in there fairly soon, or it'll turn yellow at some point in here. So this is a great look at that, and the indexes are also in here, but you can see how these great symbols that you could possibly want to trade are all in there. Here's the SPX. It is bullish, suggestive of positive conditions, favor alongside bias. You can see that very clear in there as you get this great alignment in long-term, intermediate, and short-term conditions, and the option bias indicator. So this rankings really gives you a great sense. And again, use that OBI because it gives you, I'm just going to scroll on the OBI right there, and it gives you a great idea of what the option bias indicator is telling you, which ones are in really good shape or which ones are in really bad shape for your option traders out there or short-term traders. There's the positive ones right in there, AMD, Broadcom, Costco, Disney, First Solar. Those are all P3s right there in the option bias indicator. And this is just a fantastic app. So there you can see, as we broke it down, looking at the setup for the short-term, near-term traders and how you can use the daily and the 2-hour, and the slim ribbon PO right over here, as you can see on both of these time frames, that you can use them. Fantastic information. If you're a position trader or longer swing trader, you're going to use the weekly and the daily, as you see here, which are still positive. Yes, we are looking for a period of risk coming up in the stock market. Based on what we're looking at now, that's pushed out slightly in time because of the structures that we're seeing here in the market. Yes, there will be pullbacks in the market, and yes, it's likely to be choppy. I think that the upside potential at most is that 58.30 area, which I still think may be hard to come by, but it's easier to come by now based on what we're seeing right now than I thought a week ago, because the market told me so. And that's what we are. We're agnostic analysts, where we look at all of this stuff. I mean, you could see the cycle structures tell us a lot. Our indicators tell us a lot. You can have all of that by becoming a level 3 member with this great special that we have going on right now. That is the look at the stock market, and a different kind of look that I've taken before. Please do become a level 3 member and use these great proprietary apps that we have and our proprietary indicators. Go to askSlim.com, explore, subscribe, share, follow, get acquainted, and get that free snapshot light by going into free stuff. On YouTube, subscribe to our channel, click the notification bell, and do like this video, give it a thumbs up. Follow us on X at askSlim. Any questions you might have or how to get that level 3 special, write to Matt at askSlim.com. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit